me now, fresh off the analyst earnings call, is Andrew Meister. He's an analyst at Thrivent Financial, which owns a bit under 1 million shares of FedEx stock in a number of its funds, and as of the most recent filings that we have. And Andrew, thanks so much for hopping off the call and talking with us. First of all, what did you make of the call?
Well, Betty, thank you for having me. The call was interesting in my book. I mean, I think the quarter, for the most part, was kind of as we expected, just a couple pennies below. And they checked off all the boxes that we were looking for, which was a solid top-line growth, decent profitability in light of some cost headwinds, and the ability to show some strong growth with international priority into Asia. The other thing that they mentioned in the release and on the call was that they're going to take a hard look and begin to restructure their LTL business. And that's something
that's a less than truckload business, right?
Yes, that is correct. And that's been a challenged sector of ground transportation here domestically for some time. And that they are making this move, I think they understand that the company and shareholders need to see this segment of the business, which is around 12% of revenue, to start to show a profit. But
should they have made those moves sooner, in your view?
Well, I think the reason it didn't come sooner, and this was expressed on the call, is that they're taking a novel approach to combining different types of service and different types of regional and national networks across the entire business segment. And so I think that they can differentiate the product, and that is something that, as you know, FedEx is known for, both taking new traditional markets and looking at them in new ways. Okay, so well, this is somewhat exciting.
Well, given all of that, then, what do you make of the share reaction? I mean, it is down about 3% right now.
Sure. So this is the second time in recollection where Federal Express or FedEx comes out and issues a guidance that the market views as somewhat conservative. And based on that knowledge, as we progress through the quarter, then the management team makes a release or an announcement to investors and says, well, our conservative outlook that we started the quarter with, it turns out that we were incorrect, and our businesses are performing a little bit better, especially on the top line, and that we need to raise the guidance. So we've seen this same kind of pullback and then recalibration throughout the quarter last time as well. And so expectations tend to get high as FedEx, in the recent going, as FedEx approaches the print. And this is a repeat of the last couple of quarters, in my view.
Okay, all right. So that's why you might see the stock just a bit softer there, then, or that is why you are seeing the stock a bit softer. Andrew, thanks so much for joining us. Andrew Meister at Thrivent Financial.